Okay, hi guys. This is another preparation tool for your exam, preparing financial statements. This will help you in part 2 of the exam. Okay, so this one is a shortened version. This is a very quick overview of part 2 and the processes to go through it. If you want the longer one that goes through all the bits and bobs, then you'll have to go to the other video that I've got here in this course. Alright, so what I'll be doing is I will show you, I'll go run through an example, the Amazingville Hotel, that will show and go through the steps for what to do for the exam for part 2. Now this will be a quick one, so it won't go through everything, but it will go through the processes to carry out. Okay, so this is the Amazingville Hotel example. This one is in your little workbook as well, but there are some processes to go through. So the first step is we want to analyse the trial balance. So here we want to identify which element it belongs to, and then also if it belongs to a food department or bar department item. Second step is we prepare two departmental accounts, one for the food, one for the bar. Third step is the income statement. And then finally, we do the balance sheet. So they are the 4 steps that I'll be running through. Okay, so on the left, these are all our debit items, because they're on the left-hand side of the equation. So these will be our assets and expenses. So, for example, we've got bad debts, that's an expense. Telephone expense, that's an expense. Purchases food. Okay, now because it's got purchases in the name, we do have to think about it for a little bit, and it belongs to the food department because it has food in the name. So FD, pop that in. Insurance is an expense, interest paid expense, stationery is an expense, property, plant and equipment. Right, so this is going to be an asset. Then we have to think about current versus non-current. Current, anything that will turn into cash or be used up in the next 12 months or is already cash. And then non-current, something that we're going to keep for a long time, which is what this is, property and plant. It's another word for equipment, this one. So, non-current asset. Power, that's electricity, that's an expense. Bank account, that is a current asset. Wages, and it's an expense. Land and buildings, non-current asset. Purchases bar is bar department. Vehicles, that's a non-current asset. Then we have opening stock food, so that is food department. Opening stock bar department. Repairs and maintenance, that's an expense. Okay, so there we've all analysed the debit side. Then we do the same for the credits. So these are on the right hand side of the equation. So these will be liabilities, revenues, owner equity items. So again, we have capital, that's owner's equity, sales food. Now, that is a revenue. But again, you've got to think this belongs to a particular department. We're going to use it on the departmental account first. So, that is going to be food department. Bar department, that's bar department. Sales accommodation, this doesn't belong to any other department. So revenue, the mortgage, again, current and non-current. This is a long-term liability, so non-current liability. Creditors, it's a current liability. Rent received, it's revenue. GST is a current liability. Interest received, that is a revenue. And a short-term loan. Short-term loan, that would be something different. That is a current liability. Okay, now if you need a bit of help figuring out what goes where, go back to week 1, week 2, and you'll be able to access this. It's also on the student J Drive, the chart of accounts. So under each element name, you've got different asset names. For example, different liabilities, owner's equity, revenue, expenses. That will help you figure out which one is which. So that's the chart of accounts. Okay, so that is step 1 completed. And we've identified which is which element it is, or if it belongs to a food department, if it belongs to a bar department. Okay, so in this shortened video, I'm not going to go through and build each financial statement step by step, but I will show you what they look like. Okay, so this one, just make this a little bit smaller. There we go. So this one here, this is the food departmental account. So anything that's said food department or FD, that will be used in the food department. Anything that said bar department, that's going to be used in the bar department. So we've got our sales. Oh yeah, here are the important components. Sales less cost of sales equals gross profit. That's an important calculation. Sales less cost of sales equals gross profit. Okay, the other equation that's happening on these is how to calculate cost of sales. Again, this is on Canvas, the cost of sales unit, but you just go opening stock plus purchases minus closing stock. So that's the equation that's happening there. So you do need to do two equations to make this work properly. Okay, so cost of sales happens, and you have calculate cost of sales, and then finally sales minus cost of sales is gross profit. This is what we receive from our customers. This is our total cost of restocking the bar. So that is the profit that this department has made over that year. Right, so you grab the figures from the trial balance. So sales is just literally from the food department. Opening stock, again, that's on the left-hand side down here, opening stock, food, that's fine. Then we've got to find purchases, so purchases for the food department, there it is there, so that goes in there, so that gets added on. Now, closing stock figures, you won't find them in the trial balance here, you have to look down to here. So this gives us our stock take figures, or our closing stock figures of what we owned at the end of the year or period. So in this case, we're given a figure how much food, how much bar. And so those are the figures that will come into closing stock. Right, so just feed in those four numbers, and then you'll be able to calculate cost of sales, and then finally calculate gross profit for each one. And that is the departmental account. Repeat again for the bar department. So repeat again using the bar department figures as well. And that's it. And that is step 1 and step 2. Okay, so departmental account, it's just the performance of each of those departments. Now, the next one is getting into the income statement or the profit and loss statement. So I will have a few warnings, which I'll tell you about, but here we go. So let me just find here it is. So the profit and loss statement or the income statement, it's got income there, but that is all our revenue items. So any other revenue items that we haven't used, we use now. Okay, now what's really important, really important, don't double up. Do not double up. Okay, so if you've used sales and food, don't put it again here. If you've used purchases food on the departmental account, don't double it up. You just want to pick the other items, the other revenues. The other thing is the gross profits of each of those departmental accounts that you just calculated. So I'll scroll back down to where I had it. So here we go, gross profit for food, gross profit for bar. They both enter into the revenue section up here. So they will be essentially under the revenue section. Then you find all your other expenses. So all your other expenses that you haven't used, such as bad debts, telephone expenses, insurance, interest paid, all of those ones you add there and then total up. The formula for the income statement is revenue minus expenses equals the profit or loss. Okay, now Just a quick reminder, please don't reuse stuff if you've used it in the departmental account. Don't put it on the profit and loss again. Okay, I've seen so many people do it. Okay, the final step is to do the balance sheet. Now, balance sheet is right here. Okay, so we've used revenue and expenses. Now, we're going to use the other three elements, and they are owner's equity, then we have assets and liabilities. And the formula that is used here is owner's equity is assets minus liabilities. Okay? Now, that is same as the figure, which is actually right here, same as net assets. So you know you've done it right when this net assets figure right here equals your owner's equity figure. The two should equal. So assets, total assets, minus total liabilities gives you net assets, and that figure should be the same as owner's equity. Okay, in owner's equity, we've got one owner's equity part, we've got capital, which is fine, and then we also take our net profit that we made on the income statement, put that in there as well. If it's a profit, it goes up. If it's a loss, it goes down. So profit, so add them together. Then we list out our current assets. Well, go through assets, and first of all, our current ones. Anything that you picked that's a current asset, pop it in here. Also note that inventory, so your closing stock figures, that will be here as well. So, so the closing stock figures, they are the inventory you own at that date. Don't forget about those. Then add them up. Then go turn into non-current assets, list them out. These are our longer term assets. So again, just pick them from the trial balance, property and plant, land and buildings, vehicles. Doesn't matter which order they are, and then have a total there. To get to total assets, it will be total current assets plus total non-current assets equals total assets. This is everything that we own. Okay, and that's the assets dealt with. Then you move into liabilities. And again, do the same thing. This time, we're going down the credit side. So find out what are your current liabilities. There they are. List them out, and then total current liabilities. Then we have mortgage, which is our non-current liability. So there's just one item there. Total them together for this one, total current liabilities plus total non-current liabilities. That gives you total liabilities. Total assets minus total liabilities gives you net assets, and hopefully that figure there will equal your owner's equity. If it doesn't, then you will have to go back and have a bit of an examine. First of all, check that you've got all your assets there, that you've got all your liabilities there. Check that they're all fine. Check you have remembered inventory. That's a common one. If not, you'll have to go back to the start, and because your profit will be wrong, so that could be on the departmental account or it could be on the income statement. So just double check the calculations, double check you're adding up, that you've done the right figures with right formulas. Okay, so that is the little walkthrough, and that was part 2 of the exam. So you'll get something similar in the exam. I hope this has been of help, and this gives you a really good idea of what to do. Cool. Thanks, guys.